Hey guys, we're here today with Simon Allan from Trover Accounting and Steve, my co-founder. We just want to talk about or ask Simon about some of the incentives that are out there right now in the aftermath of COVID and what's happening. We've mentioned a few times how it's had a devastating impact on, I guess, many industries, but particularly the tourism, events, hospitality industries where, they've kind of really been written off in the short term. And, luckily, and I think, all kudos to the Australian government for putting out a lot of incentives for SMEs to kind of get back on their feet. There's a lot of things out there. So, we've been trying to understand them, Steve and I, and we've been speaking with Simon to get through a lot of it. But we just thought, hey, let's get Simon online and maybe share some knowledge nuggets of wisdom. Is that a
Hopefully.
thing? I don't know.
Oh, it can be. It is now.
Yeah, sure.
I mean, in terms of if we're going to jump into it and start talking about the incentive packages, there was the first round, which was that was quite small, and they've superseded that with really what's the Stimulus 2 release, and that there's probably the best one for the business owners and businesses to date as to what they're going to benefit from a cash at bank kind of scenario. And whether it's cash at bank or not, we can get to that, but it is going to be a saving of payments, shall we call it. And then we've got to the Stimulus 3, which is, the JobKeeper proposal. And that one there's definitely, again, it does benefit businesses in that they're going to be able to keep their staff on and the staff will be happy, and we're not going to lose a whole bunch of, well-trained staff from all these businesses. But the people that are going to feel the money on that one are going to be the staff members, because that's a pass-through of cash from the government out to the staff member.
Let's stick on that one for a second. So from what I understand, the JobKeeper payment is a payment from the government to the business that has to be passed on to the employee.
Correct. Yeah. And so with that, I guess probably I might be jumping over the top here. I guess the thing you're going to say is do you have to pay that amount? Do they have to keep working? Is that kind of the angle you're going to go with?
Yeah, just trying to understand a bit more detail. So obviously, for a lot of businesses, they've actually had to let go of their staff, or their staff are, temporarily on leave, I guess, or on annual leave and things like that, or leave without pay. What does it mean for those employees and that relationship there when they're not actually at work?
Yeah. So with one of the things they've done here is, because obviously, say 2 weeks ago, particularly in hospitality and particularly in retail, a lot of businesses shut down and had to get rid of their staff. That was the first reaction they did. We don't have enough savings to keep paying people. We don't have any income coming in, and we don't have any need for these people to work because there's no customers, right? So a lot of staff got let go. What happened? Everyone went down to Centrelink and applied for the job seeker payment, right? Which is basically, a glorified dole payment. Now, this version here is designed to kind of pull all those people back that went down there to get those payments, right, and say, hey, what we're going to do is we're going to backdate the application date to the 1st of March, so that anyone that was working back then and was a full-time, part-time or casual employee that had been working for more than 12 months, they're going to be eligible for this payment. They told them not to pull out their job seeker application, but they said once, this whole JobKeeper, the detail is released, we are going to, instead of, them going down and getting payments from DHS, it's going to be paid to the employer, and then the employer is going to pass that out to these guys. So it's kind of like a whole bunch of people that we're going to get, I think it was 500 a week previously, and now going to get the 750 a week paid through their employer.
And so there's a bit of confusion, I think, out there. So, for example, if the employer's not sure if their business is legible or meets the criteria, where does that put that staff member? They're in a bit of limbo, aren't they?
True. I mean, that's probably why as well they've told people not to go and pull out your job seeker application, on the grounds that you don't know yet whether your employer is going to be eligible. Mm-hmm. But the one thing, and this is probably the most important thing, because I'm still fielding numerous amounts of phone calls and questions at this time about am I eligible? How's this going to work, right? And the way I see how this has happened is the government needed something to tell to everybody to kind of keep them happy when they also announced that people were going to go into, quite a strict level of lockdown, the 2-person rule, you're not allowed to leave your house except for, a list of certain approved activities. So like they needed to give something to the people to keep them happy when they, announce these things. So the Treasury release and I guess all the details of JobKeeper, they weren't ready when they released that. I think it was on Monday or Sunday night or Monday from memory, right? So we've got kind of like a half drafted piece of legislation, and, the true eligibility criteria, I think it's still to be released, right? Like, what does it look like? What about all high growth businesses? What about startup businesses? Because there's so many scenarios that are going to fall out of a this year, last year comparison. The seasonal businesses, etc. Right. So I think right now there's almost no one out there except for people that, have suffered a significant loss in trade, which would be your hospitality retail businesses, just kind of off the top of my head, where they've gone down to like 20% of what they were doing. So an 80% reduction. Those guys, I think, can probably tell their staff that we are going to be eligible. Yeah. Everyone else that's, feeling a little unsure, I'd still be saying to the staff members that there's probably a pretty good choice that we are going to be able to help you out with this. These business owners should be thinking about what they're going to do in a practical sense, because lots of these people would have been paid more than $3,000 a month. Yeah. They might have been on $5,000, $6,000, $7,000 a month. So they need to start thinking like, are we just going to pass through the minimum amount, which is the $3,000? Are we going to try get them to come back and do some work if we have let them go? Are we going to pay them more, right? And kind of start trying to formulate a plan for that on the assumption that there is a good chance they're going to be eligible. But, you can't call your accountant up and get a definitive answer yet, because no accountant out there knows the details.
Yeah. Could I just clarify some of that, some of the, I guess, options available to employers? It says on the one of the government websites that it will be up to the employer if they want to pay superannuation on any additional wage paid because of the JobKeeper payment. And that, I guess, line kind of threw me off a bit, because it made it a bit unclear as to whether super was meant to be paid on the 1,500 or whether that's a part of it, or where that relationship lies between.
From what my understanding, right, is the government has come out and said that you don't have to pay super on the JobKeeper amount, right? So that $1,500 is a $1,500 gross payment. So if tax needs to be withheld, tax can be withheld. However, $1,500 has to go straight through out to the employer in a gross sense, and there's no super, right? Because the ATO is only going to pay you $1,500. They're not going to then make you pay $1,500 plus 9.5%. However, if you do pay in excess of the $1,500 a fortnight or whatever you're paying him in excess is ordinary times earnings. So that would have, standard super obligations on it.
So if the business were to pay an employee $1,600 in a fortnight, $1,500 would be subsidized, and then you would pay the super on the 100, or do you pay the super
the 100? Just on the 100 gap above, right? Yeah, and so like that, there is, once again, it's still a little bit unclear as to like 100% how this is going to apply. But if you take like a reasonable approach to it, I think that would be the fairest way to interpret what they've said to date. That's what I'll be backing as the outcome.
And
just on that, with the super stuff too, if you want to talk super, and this is probably an important thing for business owners out there too. To date, like the most recent thing I've read from the ATO is that they haven't changed any of the super guarantee obligation dates. So your March quarter super still is due on the 28th of April, right? There hasn't been any relief offered in that space to date.
Sure.
And I don't think they will either. I can't see them, because that's the money that you owe from prior to coronavirus.
Okay. And as far as you know, and I imagine you might have received some calls about this, for businesses registering for the JobKeeper at the moment, there's just on the ATO, I think there's just a page there where you can register your interest to receive more. That's the current status of where things are at. They haven't progressed things further.
There's nothing more than that at this point. But I reckon end of the week is like, maybe tomorrow or over the weekend. Surely, we must be due some more information here. And let's just go to what they've done here too. They said that, so the start date for eligible employees is going to be the 1st of March, right? So, people that have been laid off at the start of this crisis are going to be eligible for the JobKeeper. But what they've said though is they're not going to pay from March onwards. They're going to pay the month of April in arrears.
Right. Okay.
right? So it's kind of like April. The first payments under this are coming out in early May, and it's going to be
Yep.
$3,000 for the month of April. So I
Yep.
think what the ATO has done there is bought themselves a bit of time, i.e., it's what is the 2nd of April now. So maybe, next week, this all has to be sorted out, because call it, if you're paying on a fortnightly
'Cause it'll
basis,
be-
by the 15th of the month, you're probably your first $1,500 payment has to go out. So I would say very soon we're going to start getting a lot more clarity.
Nice.
Okay,
I
awesome.
think
Just
that's,
wanted to know because, I imagine a lot of businesses would have done exactly what we've done. Jump on the ADO website, how do I register? And then I imagine everyone's sitting there every day checking, did I put my email and address correctly? Because if I didn't,
Yeah,
I don't want to be sitting here and everyone else's business is applied for some program.
yeah.
I think overall that's pretty good advice though, which is, unless you've been significantly impacted as a business owner and your business is, like you said, 80% down the gutter in hospitality or whatever it may be, then make sure that your employees are still applying for their JobKeeper allowance through Centrelink or wherever that may be. And I guess until further information. Let's move on to the next one, which has probably got a bit more assurance around it, which is the cash flow boost with the PAYG. Do you want to walk through that a little bit?
Yeah, I mean, this one here is it is good for business. Like, I'm not going to say it's not good for business, and it's going to be good for it's going to be mixed. Is I guess what I would say, because for businesses that are in really dire straits, I don't think they were probably going to pay the ATO anyways, right? Like, let's call a spade there. So getting a credit against your debt to the ATO, is only going to be pseudo helpful. It's definitely helpful in a holistic sense, but in terms of, is it going to solve your immediate cash flow problem, revenue problem, laying off staff problem at this point in time? No, it's not, right? But the way it works is whatever you pay as you go withholding, this is how they're referencing it. So for the period to June 30, there's a minimum payment of 10K and a maximum payment of 50.
Yeah.
How is it referenced and eligibility referenced? It's in line with pay as you go withholding on your wages, right? So businesses that don't pay wages, now they're going to be eligible for, that don't pay as you go withholding. They do have wages. They might have a couple of little staff or a couple of kitchen hands or whatever it might be, people that do some ad hoc delivery work, but they pay them on pay as you go withholding. Those guys are probably going to get the 10K payment as the minimum, and that's going to come as a credit on their integrated client account when they lodge their March quarter BAS, and the payment's going to come onto the account on the 28th of April. Whether those businesses will get a little refund is it's going to first net off against your GST obligation for that period, but most small businesses that wouldn't have many staff members are only going to have a couple, call it a 2-3K net GST obligation, I would imagine. So for those guys, they're going to get 10. They've got a debt of 3, so they're going to get a refund of 7 sometime around the 28th of April or within 14 days of that, right? So those little businesses will get a bit of a boost. Let's then go to the bigger businesses. Most bigger businesses might have, 20K pay-as-you-go withholding, call it, on their, a whole bunch of staff. The director gets a salary, whatever it might be. So on their quarterly BAS, they're going to get a direct credit against that 20K withholding, right? But a business of that size is probably still going to have a 10 grand debt of GST or a 20 grand debt of GST. They might pay 20, 30K every quarter to the ATO. So those guys are still going to have to deal with their $10,000 obligation to the ATO. Right?
That's really, really interesting. And that's similar to, I think, a lot of the stuff around the instant asset write-off. Like it's great, but ultimately in terms of what businesses need right now, which is cash flow, it's not, Yeah,
exactly right. Like, I've only had maybe 2 clients call me up and say, wow, what a gift, and how good is this increase to $150,000 instant asset tax write-off for me, right? Because first of all, a tax write-off, it's no cash that you get right now. You go spend 150K, your tax benefit is going to be, if you're a company, 27.5% of that number. And when do you see the benefit of that? When you lodge your tax return and go to actually pay the tax, which in the current financial year is not, literally 12 months down the track until 15th of May 2021, right? So it's kind of like, it's on that sense, like there's no immediate benefit from a cash flow perspective for the business. Second of all, most businesses right now are looking to consolidate spending. They don't have, they're worried about having enough cash at bank to keep a skeleton team operational and pay rent and things like that for the next 6 months. They're not sitting there going, wow, I've got so much free cash to go and splash on new trucks or equipment or whatever, right? So it's that one there, interesting policy, interesting policy choice. Some may say it's helping out the just very wealthy or established businesses who probably didn't need it anyways, right?
Yeah, definitely.
And just to circle back on that cash flow boost for business though, just to close that off, it's kind of like whatever you get on your in this March BAS and your June BAS figure, whatever those pay-as-you-go withholding obligations are, the government is then going to give you 2 equal installments. So if, say, for example, across this period, you withhold 20K and another 20K. So in this first 2 BASs, you're going to have a 40K pay-as-you-go withholding obligation. Like in the second half of the financial year, the credit you're going to get on your account is going to be a first lot, 50% of the whatever your total was. So if it's 40 across this period, it's going to be 50%, so a 20K payment, and then another 50% being another 20K payment. So your total benefit's going to be 80.
Right.
Gotcha. In terms of tax offsets you're going to get on your integrated client account. But businesses that have debt, for example, like existing, pay-as-you-go BAS debt, which is like all the businesses that are really going to be suffering right now are the ones that have all these common problems, which is if they've got ATO debt. So even if they were eligible for getting some money back or a credit, they owed the ATO money anyway. So all it's going to do is help pay down the tax debt.
Gotcha.
So yeah, helpful. Yes. Very kind of the government. Yes. But I think it's going to help businesses that are like more people that are not as in such, dire financial situations are going to be more thankful for this and going to see it as a benefit to them. Whereas the ones that probably really need it and are really suffering, they're not necessarily going to see this as a win for them.
Yeah, sure.
But on that ATO thing too, this here is another really good release that they've kind of brought in is given the fact that like the government's trying to get as much money into the economy at the moment as possible. We're seeing that with lots of government contracts, kind of front-ending payments out to their suppliers. We've got, all this injections of cash and release from debt. Like the one thing the ATO isn't doing right now is chasing tax payments. So if you do have a pay-as-you-go a payment plan in place or you're any form of existing tax debt, you should get your account to call up the ATO, get a freeze on the GIC, because that's something they're doing quite easily. Renegotiate a much lower payment plan, maybe $250 a month, something like that. It'll only be a 6-month interim arrangement, but it'll at least keep you in good sorts with the ATO. You're not going to default your payment plan, etc. So yeah, I would recommend doing that too.
Nice. Just in interest of time, I guess. Two things that, unless Steve, you got something else to ask as well, but 2 things I wanted to go through very quickly. The first one was just if you had any clarity or advice around the unsecured, the unsecured loans that the government's up to 250,000 for small to medium businesses. And then just to kind of get your thoughts on what SMEs that are struggling right now should really be looking out for, what they might be wanting to do to get through this whole cash flow crisis or the crisis in general.
Yeah, I mean the 250K loan, that's that there is it's like the RBA is going to release a bunch of money to the banks on cheap interest rates for the banks to then on lend this to small businesses, right? So that's the first thing to know here is it's not the government that's actually doing the lending. It's going to be your standard financial institutions, banks, CBA, Westpac, ANZ, all the guys that most small businesses are working with anyways. But the thing with that is, yes, it's a 50% guarantee from the government, right, which is fantastic. So if the business does go under, obviously the government's going to pay the bank 50% of the debt, or if they can't repay it. So that is going to kind of help with the liquidity and the making the credit assessment process maybe slightly more generous, and then they know that lots of these businesses, their serviceability calculations compared to where they might have been a couple of months ago are not going to be as healthy. Therefore, the way I see it is there'll be a bunch of businesses that will probably squeeze in here to be able to get access to this funding. But because it's still going through bank channels, they're still businesses. They've still got, credit assessment criteria. So it's still going to be limited to fundamentally strong businesses, I think. So if you've got bad credit files, if you've got heaps of ATO debt, if you're a business that, particularly like startups and all those kind of guys that don't have any, revenue, they rely on equity raising that just becomes losses, shall we call it. like all of those businesses, I think will struggle to get these products. You know, and I don't have a lot of guys going for them yet. At the moment, I've got one guy going through CBA, and to date, all of the information that he's been asked for is the standard stuff that we would be providing. You know, your tax returns, your BASs, your cash flow stuff. So, yeah, like we'll have to wait and see as those products get fully rolled out. I think it does come into though, like the next question, which is kind of what would, you know, what should business be doing, right? And I think like the first thing you've got to be doing is looking at your revenue and kind of working out, what does it actually look like? What options do you have to either diversify, change up and adapt to the new operating environment, right? And hopefully, you know, you're a lucky business that can do that. And you are seeing that with some guys out there, you know, manufacturing different things that they know that people are going to need, trying to import new stuff that they know people are going to want, all of this whole takeaway push. And I guess the government's trying to help all those hospitality guys with, you know, changing opening hours and changing where they can trade from and all that kind of stuff, right? But yeah, you got to focus on your revenue, and then you got to focus on your expenses and look at what you can cut, right? And why am I saying revenue expenses? Because you got to put a cash flow plan together, right? You got to look at kind of a few scenarios and work out how can you, like, where are your cash shortfalls? And so once you kind of have got your revenue and your expenses and you've cleaned those up and you've cut out a lot of the fat in your business that you know you don't need, then you're going to see the holes in the next 6 months as to when you're going to need some capital, right? And you can start to factor in these government payments now as well to help you with kind of working out, you know, taking some of that wages burden off your business. Okay, what does that look like? Can we now still pay our 50% rent if we have got that kind of, you know, help from our landlords? But then if you do see these cash gaps, then you got to look to the, you know, how you're going to fill them, right? And that's where these other benefits come in, like that 250K loan. Like, you know, if you see that in 3 months' time you're going to need it, well, then you better start trying to, you know, get all the information and get all of your tax returns or get all your BASs together, like actually be compliant to be able to get access to some of that capital. Or, you know, like there'll be some guys as well that are going to try and get out of leases and try and wind up.
Absolutely.
If they think there's just no way through.
Steve, unless you had another question, we're a bit short on time. I had one more, but Steve, do you have something to?
No, that's really good. Actually, I'm just really enjoying the advice that I guess
it's been really
not stuff I'm seeing elsewhere.
Advice.
So it's just, it's kind of good to get something different. You know, I've had a look at the government website, and so it's good to just see kind of practical steps of what to do.
The one last thing, just quickly, because we're a bit short on time, but do you have any? Can you kind of give a real short overview of all this stuff around like not paying interest or interest being deferred or rental agreements? What does that all mean for a small business right now?
Yeah, well, again, like I think the whole interest deferral, right? Like what's been released here and what the banks are saying for financial hardship cases, I believe that's twofold. So individuals, so if business owners have mortgages and stuff like that, and they are in duress, they can apply to their bank for a stay on mortgage payments for a period. Like I saw the banks did release, I think it was CBA said 3 months. No, Westpac said 3 months, CBA said 6 months. So like there is some form of, you know, deferral in place there on, you know, home mortgages, shall we call it. So business owners could take advantage of that. And I think that's important.
Right.
You know, it's not a free hit. It's just, you know, you're obviously going to pay interest on that deferred interest. But you are at least saving on a cash flow basis right now. It's going to cost you more because they're still going to accrue the interest on it. So that's that one. And then in the kind of commercial space, again, the same flexibility is going to be afforded to your landlord, right? So if your landlord can go to the bank and get some form of deferral on their obligations to the bank, that should then reduce, you know, their need to get the full rent that they've been charging you, right? So that's kind of where, you know, you might have a bit of additional bargaining and negotiation power with your landlord to reduce rents, etc. And then on top of that as well, obviously the New South Wales government's released, you know, a stay on evictions and things like this for a period of 6 months. But what does that really mean in terms of like, you know, if you can't pay your rent, is it just going to accrue? And so at the end of it, in 6 months' time, you have you know, 6 times your monthly rent debt. You know, what can they do? Can they take your bonds off you? You know, and I think it's more, and also like, what about your rental history? You know, is this going to go down as a black mark on that list, etc.? Those kind of things. I don't know if there's been a full on clarity provided in that space. So I think the default position though would be that because we live in a capitalist society, no one is going to give anyone a free walk. So my default position would be, just because you can't pay your rent now and you might be able to get some form of deferral in place, I still think your landlord's going to try and get it off you
for sure
when you're either trading again, trading profitably, or even if you wind up, I still think they're going to try and hit you at the end there. So
definitely.
And with all this stuff, there are lots of other things that have been released. Like there are a couple of eligibility things with the cash flow boost stuff as well that people need to look at around, like you got to have lodged all your BASs or lodged a tax return, things like that. So like super non-compliant businesses that haven't lodged in a couple of years are going to fall outside of eligibility. There's other debt release stuff. So like statutory demands have been pushed out from 21 days to 6 months. And, you know, there are a whole range of other measures that are out there. However, I still believe this. There's no handouts that are going to fundamentally change, you know, the business's ability to trade through this. You know, you're going to have to look internally and work out how you know, on income and expenses, you can come close to getting through it. I think employees are covered now under the JobKeeper payment. But yeah, businesses that have got such a massive reduction in revenue and still have a bunch of costs, like I don't know. You know, how they're really going to keep going through this if this just keeps going for months and months and months.
No, look, Simon, we call him Simo. Thanks a lot. We're going to have to wrap up, but that was really, really, useful for me personally, and I'm sure Steve and anyone else out there that's watching. I want to just say, if you've got any questions, then Simon, I hope I don't put you into this, but I'm going to put Simon's email and details in the comments. And feel free to reach out if I'm sure he'll, you know, be more than happy to help. It's a tough time right now, and you know, it's about getting the right advice, having the right plan, and putting it into action, I think.
All right, absolutely. No, I'm more than happy to help out. So thanks, guys, very much appreciated.
Thanks, appreciate your time.
Easy.